There is one stock that has outperformed the S&P 500 over the past year and is going to continue to outperform it over the next year. The S&P 500 has gone straight up so far this year. A cool-off period would probably be healthy. Either way, we're definitely starting to see some cracks start to emerge as there's a lot going on in the world right now. In recent weeks, you're starting to see a lot of money pile into oil. This past week into defense stocks, they're going up largely based on these geopolitical uncertainties and the powder keg that is the Middle East right now. Then you had inflation come in hotter than expected for the month of March. And we had these 3 interest rate cuts that were assumed to be a certainty that now are starting to seem maybe a little less likely this year. Regardless of all this, there's one company that is going to continue to dominate no matter what the rest of 2024 entails. I can think of few better places to wait all this out than in Amazon stock. I've made many videos on Amazon in the past year. The stock is up 93% over the past year compared to the S&P 500's 26%. And year to date, the S&P is up just under 10% and Amazon's up 26%. It went up another 2% today since I published an article this morning. I still think there's a ton of upside left in this stock. It could go up another 50%. I'll give you guys a few reasons why, and then we're going to take a look at the CEO shareholder letter that Andy Jassy just put out a couple days ago, some of the key points from that. So let's start with the interest rates. The high rate environment we find ourselves in, or a return to normalcy after a decade plus of ZIRP, depending who you ask, has decimated many companies across industries. From companies with lots of debt to ones that just had more discretionary type products, they're struggling to grow. But through it all, Amazon has continued to grow, and they're growing their important business segments double-digit percentages quarter after quarter. Again, while many other companies are just seeing revenue decline or not, have the same level of growth. Amazon's revenue for 2023 was $574 billion, up nearly 12% from the prior year. It can't be overstated how impressive it is to grow double digits at that scale. Not to mention their faster growing segments. For example, in Q4, their advertising segment grew 26%, AWS and subscription services both grew 13%, and third-party seller services grew 19%. This company is not slowing down. Increasingly, I just want to be in the companies that do well in the bad times, as it's more telling than the ones who perform well in the good times. Here are a couple other immediate benefits to the bottom line. Amazon has $86 billion in cash on their balance sheet. So while all of these other companies that are laden with debt are paying out a huge chunk in interest expenses, Amazon is earning high interest rates on their cash. After largely reinvesting everything over the last 20 years, the company is starting to really bear the fruits of their labor and demonstrate that they can pull levers to increase profits with relative ease. One example is Amazon has 230 million Prime members. They just introduced an ad-free tier for Prime Video. It's $3 a month, and while most aren't going to pay the fee, it actually works out better for the company because they're projected to make more from the advertising revenue anyway. Analysts are projecting $1.3 billion in 2024 and $2.3 billion in 2025 just from that. Amazon's really revolutionizing advertising. They know what you want. They're starting to do personalized ads that are going to convert at a higher rate, and that's going to allow them to charge advertisers more. Another example is they've got this fleet of Rivian electric delivery vans now, which is going to save them a ton of money on one of their biggest line item expenses, which is diesel fuel. And especially lately, the price of fuel just keeps going up with inflation here. So these are just a couple small examples. The CEO, Andy Jassy, just released his annual letter to shareholders. And in that, he outlined the ways which the company continues to cut costs, get leaner, while also investing heavily in new innovations for the future, like artificial intelligence. In the shareholder letter, Jassy stated, as we look toward 2024 and beyond, we're not done lowering our cost to serve. We've challenged every closely held belief in our fulfillment network and reevaluated every part of it and found several areas where we believe we can lower costs even further while also delivering faster for customers. Now, in the past, the company has stated many times, the faster they get items to customers, the more often customers shop and the more money they spend. So they're just continuing to increase these speeds. What do you think is going to happen there? So he talked a lot about artificial intelligence And I'm sure you guys you're all sick of hearing about AI, so I'm not going to focus too much on that part, but there was a lot of good stuff in the letter on, Amazon. I think is a very underrated play that's not getting talked about in the AI space. They're working on the 3 levels that they see of AI, as well as, they see generative AI as a huge opportunity. But I'm going to focus on the other things for today. I'm sure we're all tired of hearing about artificial intelligence. So one example is their grocery business. Jassy stated, we have a very large and growing grocery business in organic grocery with Whole Foods Market and non-perishable goods. We've been working hard on building a mass physical store offering with Amazon Fresh that offers a great perishable experience. However, what if we used our same-day facilities to enable customers to easily add milk, eggs, or other perishable items to any Amazon order, and they would get it the same day? Think about how this starts to change things more. Amazon has already taken so much market, and they're just going to continue to do it. They're changing people's shopping patterns. They're changing how often they go to the grocery store. I mean, think about those items. You're going to the grocery store once, twice a week. You could potentially just start getting that as part of your Amazon order. Not to mention the immense level of synergy that we'll get to in a second here. So they also mentioned drones. They're working on Prime Air and having drones eventually deliver packages to customers in less than an hour. Think back to what I said earlier, the faster they're getting the items to people, the more they're shopping, the more they're spending. Just imagine if you're getting your items in less than 1 hour. This is going to happen eventually. It's obviously not going to start off with all different things. It's probably going to follow a similar trajectory that Amazon did in the beginning, where they started with something simple and easy to ship, like books, and eventually the size of the packages they'll ship is going to continue to grow. Think about how the experience of ordering perishable items changes with sub 1 hour delivery, Jassy states. I think where you start to see a lot of synergy here, right? So they've got extremely fast delivery with or without the drones. You've got perishable goods that you can get delivered to your house. You've got prescriptions and medication, which takes us to the other part here, the health offering. So Amazon is doing a lot. This is more of a moonshot, but I think you just see the synergy of all these things working together. They are moving into healthcare. There is an enormous global healthcare problem and opportunity. I've discussed this in past videos, but Amazon has taken multiple steps now to move into the healthcare arena. They've got acute care with Amazon Clinic. They've got primary care via One Medical, a company they acquired. They have a pharmacy service to buy whatever medications patients need and get it all shipped to your doorstep. He says, because of our growing success, Amazon customers are now asking us to help them with all kinds of wellness and nutrition opportunities, which can be partially unlocked with some of our existing grocery building blocks, including Whole Foods Market or Amazon Fresh. So again, I just think it's starting to become very clear where all these things work together. Whole Foods, delivering people fresh, healthy food, also helping them with their healthcare needs. This is just going to grow, right? There's so much synergy here. They've made all these smart acquisitions that really can benefit each other. And at the end of the day, it just keeps people in the Amazon ecosystem and using it more and more. And if you didn't need any more reasons to like Amazon stock, I think the cherry on top of it all is that Jassy stated, while they have nearly a $500 billion consumer business, about 80% of the worldwide retail market still resides in physical stores. 80% is still in physical stores. And when we look at cloud computing, Amazon has been very successful with AWS. Their cloud computing business is at nearly a $100 billion revenue run rate, and yet more than 85% of the global IT spend is still on premises. There is so much opportunity for this company to continue growing. They're really just getting started. So definitely do not sleep on Amazon stock. So whatever happens this year, I sleep easy knowing long-term that Amazon is one of my largest holdings. If you enjoyed the video, don't forget to like and subscribe. Let me know your comments down below. Also, check out my Substack in the description below. You can check out my articles on Amazon there. And if you're interested, also join our Discord community. This is Vinny from the Investment Club. I'll see you guys next time. Thank you.